Right, good morning, everybody. Right, let's get going. All right, so US missed on a few sets of data yesterday. We first had jobless claims, which came in a little bit higher than 10,000 higher than expected. We did have the unemployment rate, which fell to 5.3% versus 5.4%. And then we had non-farm payrolls, which came in at 223,000, missing expectations of 233,000. And then factory orders fell 1%, with an expectation of only a fall of only 0.5%. So all in all, slightly negative. For the States, you can see they sold off initially by those two graphs underneath, but sort of by the end of the afternoon, they'd made up all those losses and to end pretty much flat on the day. Obviously, it's Independence Day this weekend, so we have a public holiday today. So we're not going to get any follow through or any indication from the US on where markets are going to be heading into the weekend. All right, out of Asia, pretty much weak all the way around. Aussie down just over 1%. Hang Seng down a scrap. Kospi down a scrap. The biggest loser was Shanghai again, down 7% earlier today. Managed to make a bit of that up, but still down quite a lot on the day. Out of stocks in Asia that will affect us, we've got Billy's, which was down 1.5%. Not 100% sure where it is now, but it was reasonably negative. And then we have Tencent, which is down just under 1%. So we might see a little bit of weakness on that space, although it has been trading pretty well on the back of the recent results. And obviously our commodities in general have been struggling. So a weak day out of Australia isn't going to help things. All right, the charts of interest today just basically showing the decline out of the Shanghai. We got 25% decline in less than a month, which is pretty much a crash. I think that is the definition of a crash. Whether this is the end of the bull run, I'm not sure. I wouldn't bet on it. But massive volatility out of China. It must be absolute crazy to trade that market right now. All right, a few stocks going ex-div. We've got famous brands, STP and TAS. Those got ex-div on Monday, last day to trade today. Then key factors today. We had some data out of Japan and in China, PMI. And at 9:55, we've got services PMI out of Germany, services PMI out of the Eurozone at 10:30, services PMI out of the UK, and then 11 retail sales out of the Eurozone, so absolutely nothing to drive markets today. All right, let's have a quick look at a few charts. We'll start with the Aussie. So this is one we've been following with Joe over the last week or two. This big head and shoulders that sort of seems to be forming on the Aussie. It's pretty ominous. We got it back up to the 47,500, which we marked as a key level based on the height of that left shoulder. It failed there and reversed quite sharply lower. We lost about 1,200, 1,300 points from the top. We've been inching higher, but you can just see how nervous the market is. It's thin. You're getting 200-point moves on absolutely nothing. So nobody really knows the direction. I would expect sort of much of the same. We're going to probably get a little bit of choppy volatility. I'm not sure. Really not sure which direction we're going to be moving in over the next sort of few weeks. We might just be moving out to the right as we form that right shoulder. So keep an eye on that. I would say that if we can get a convincing close above 47,500, which I know is still 800 or so points away, then there's the possibility that we move back to new highs. But for right now, we've got to be watching that 47,500 on the upside and sort of 45,400 on the downside for the break of that head and shoulders. All right, Anglo Gold. This is one that Joe showed yesterday. We were watching this this 104 level very closely, and any of you that actually traded that one intraday yesterday would have seen how the stock absolutely plunged once it broke through that level. We got a quick move down to 102, and then sort of hovered between 102 and 104.50 for the rest of the day. I think it closed up at the higher, or for the high for most of the day at 105. It had a really good day out of the States actually yesterday. So the Rand equivalent where it closed in the States is at 108. So if we bang it down to a 30-minute chart, we can get a pretty good idea of that level. That 108 level is almost exactly where we broke down from this over the last sort of month. So let's just see how it reacts. If we get that move up on the open, we should get a few percent on the open on AngloGold. If it fails that level, it could be a great shorting opportunity. If it gets through that level, it might sort of be making a bit of a recovery. So big level at 108 there on the short term on AngloGold. All right, Aspen. Aspen has been a difficult trade. I think a lot of guys like the business, and they've been trading for a bounce, but it just hasn't been able to bounce with the rest of the market over the last few days. We obviously still have this head and shoulders that's in play. It hasn't, it broke through the neckline, come back down, broken through the neckline again, come back down. So no convincing break up and no convincing break down. I think we had pretty much an inflection point here. If we draw this diagonal line up, it arrives at 360, and then the horizontal line is around about 369. So if we keep a very close eye on that, if this resolves below 360, if we get a decisive close below there, that I would imagine would be pretty bearish for Aspen. But if we can close above this side of the wedge, which is at 380, then it might actually result to the upside and hopefully start trading above that 200-day moving average again. But keep an eye on those levels in Aspen. There could be a reasonably big move on either side of that. All right, the next one I want to show is Billy's. So Billy's, we've been watching this 250-ish level before it broke. It broke and had a very, very quick move, $10 to the downside, along with a lot of the other commodities that had big moves to the downside. Yesterday we tried to put in a little bit of a rally, managed to rally up to about 246, I think intraday. I think it closed around 244. Will this negative day out of Aussie negate that rally? I'm not 100% sure. This is quite a big pattern that it's broken down from, so I wouldn't be surprised if there is a little more downside here. Keep an eye on it. I would say the next level, just based on the last day or so of trading, or 2 days of trading, would be 240. A break below there, we could be heading back to test any of these sort of minor supports, in around this sort of 235, 233 level, and then the previous low, which comes in quite a bit lower. So I wouldn't be picking up Billy's at these levels unless we sort of get a convincing close back above sort of 260, 265, around there. And the last one I wanted to show is Steinhoff. Steinhoff's managed to catch a nice bid over the last few days. If we have to draw a resistance line in here, we're coming in, we're conservative and drawing the wicks here. We had a move through that level yesterday, intraday, but failed it and closed sort of flat on the day. So we're looking for a sustained move. We can have a day or two where it convincingly closes above 78. We could be heading up into new all-time high territory. We actually looked like we could be forming a bit of an inverse head and shoulders continuation pattern here. So maybe we just move out to the right for a little bit while markets resolve itself, and then we do get a pop above, maybe in a few weeks' time, once global markets are a little bit more sure of themselves. Anyway, that's all for today, guys. Best of luck trading.